Well, you are joining us for another instalment of Deal Analyser Week 2020, where all this week we've been celebrating the launch of the new Lendord deal analysing tool. And as always, my guest is Aviram Shahar, CEO and co-founder of Lendord, joining me across all these calls. Hello, Aviram, and today I'm delighted to welcome Mr. Phil Stewardson, property developer, PT member, and a friend, somebody I'm proud to call my friend. So, Phil, welcome along to the call.
Oh, thank you very much, Vanessa. Nice to see you and have a chat. And Aviram, after exchanging a few emails and messages, and you kindly pointing us in the right direction with some stuff and helping us set up Landlord, it's really nice to finally chat with you.
Likewise.
Fantastic.
Thank you, Phil. Thank you.
So, Phil, in terms of the actual software, you've started using it and finding your way around it. But if we could just really start at, where you're at post COVID-19, how has your property investor life changed? And are you thinking that there's a lot more risk about now, much more amplified in the property sector, and that these kind of digital tools are a good way to mitigate that?
Oh, without doubt, Vanessa. We haven't started back fully yet post-COVID. Unfortunately, during that period, we've lost a few friends, and we've also lost a member of staff. And we know of a number of people that have been affected. So we have been ultra careful, and lockdown. All we've really focused on has been urgent repairs, really, which we've kept addressing. And for the first time in 25 years, we haven't bought anything for 3 months.
Wow.
As I say, we've just focused on repairs, and we are in a position where we sort of have to buy. We've got a team of lads that we employ and a sort of gang of subbies that we give regular work to. So we will obviously be starting back soon, but consistently up until the early part of this year, we bought a property for the past nearly 10 years. We bought a property every 2 weeks.
That's a big change.
Yeah. So what we will be doing, we're starting back on more on a sort of low level from next Monday. We will be focusing initially on maintenance. We are and have been sort of looking out for new deals over perhaps the last 2-3 weeks, but I am I'm amazed really at what's being reported in the market with how agents say they are busy. I genuinely believe they're busy, but I do wonder how many of those sales are actually going to come to fruition. And I think a lot of them are perhaps busy renegotiating deals that got stalled with lockdown, where people are saying either I'm concerned I don't want to buy, I'm concerned I don't want to pay as much, or my lender is now insisting on a bigger deposit. And we've got a couple of sales on at the moment where we think that's a likely scenario. So we are very conscious that although we know the market is going to stall, perhaps I should say, I don't see much of a fall in the areas that we operate in. And I think a lot of people will hold out for the price they want, which is a pre-COVID price. But they're going to take a very long time to sell on that basis. And we do tend to get a lot of people come to us because we are sort of well known for buying quickly, buying unconditionally, and buying for cash. So we still think those deals will be around, but we need to be confident that what has always been a bargain, or what was a bargain 3 months ago, that we'd be happy to pay. By the time we've got the sale through, which will probably be 4 weeks, and then we've done the work, which is another 6, 8, 12 weeks, depending on how involved we are, where are we going to be then? Because constantly we're seeing every day jobs being lost, and it's not a dozen or so, it's 100 or 1,000, and I don't really see that ending before the end of this year. I think that will be a constant stream of just bad news, and I certainly don't see this quick bounce back that we're being told we should see. I mean, the stock market has done incredibly well, but how long's, is that just a bounce and it's going to fall back? So I really am skeptical about what we want to buy, and we need to. I mean, we will be next week having a series of meetings to say where are we at. If we're buying anything, it really has got to be with the intention of going back to a fairly long-term hold. Because what we're buying now in 6 months' time might look very expensive. It's so difficult, but I mean, Lendord has come along at just the right time for us. We have a sort of love-hate relationship with all technology. We know we should use it. We try to use it, but we're not really the best of friends. But we are getting there. We're trying to get all our information to be stored in the cloud now. We've started using Zero, moved from Sage to Zero, which constantly I find absolutely incredible. It just blows my mind. So Lendord has come along at the time where we're really trying to grapple technology and use it religiously, really. And so, yeah, it's great timing. And from what I've seen so far, and I have spent several hours there, I'm really, really impressed.
Oh, well, that's lovely to hear. That is music to our ears. Just give us a very quick flavour of your portfolio, because you have residential, you have you've done commercial, you do a lot of commercial to resi, you do buy and quick sell. So you have quite a mixed bag of property activities, don't you?
Yeah, we do. We trade as 6 different entities. There's a partnership with my brother Mark, which is all residential, which is how we started when we began in 1995. Our intention, as I think we've discussed a number of times, was to buy sort of 10 properties as a pension fund, really. We soon got to that figure and found it was actually more profitable than our day jobs. Carried it on, and then in 2002, that was around the time Sarah Beanie was very prominent, telling everyone to buy a house and do it up, and that's what you should be doing. So we just couldn't buy anything, and that was fortunately at the time that lots of pubs were closing. So for about 8 years, we literally did pubs one after another, and we got mixed use. So we had commercial on the ground floor, flats above, and we just carried on like that as Stewardson Developments. And then we formed a couple of companies alongside that, one with a friend who's a surveyor. And then we took the opportunity to move up north. We spoke to Lloyds Bank, who were quite keen to offer funding to invest in the northwest. So very rapidly grew a portfolio up there of about 50 properties in a separate limited company. So now we actually say, when anyone asks us, we will buy anything. If there's an angle in it for us, we'll buy it. And we'll buy a house, we'll buy a garden, we'll buy farmland, public libraries, fire stations, job centres. We've bought all sorts. And if we can see something in it, we can add some value, and there's development potential, then we'll do it. But pubs have just been fantastic for us.
Well, there could well be some more,
Yeah,
more to come.
Unfortunately, that's very sad, but there will be opportunities, and now obviously we've always tried to focus in areas that are unpopular. So obviously pubs is going to go into that realm soon, but at the moment we've been buying or up until COVID, we've been buying lots of retail. And I think that's where we will focus. Commercial, retail, industrial, we'll continue our focus in those areas. Retail's very out of fashion. Yeah, the model that we've got where we provide mixed use, if the premises are right for us, we will keep going with that. And we've got some great small occupiers who will survive because everything they've got is in that business. And they will make it work. And the really annoying thing, which I'm really going to capitalise on post this, is that, you know, we've been doing now for 20 years small chip shops, hairdressers, Chinese takeaways, all sorts of small businesses. And then you've had a valuer out from one of the lenders who's been saying, oh, you know, it's okay, but they're only a small business. It's not like it's a Marks and Spencer's, is it? You know, and I'm just so glad we went down that route and didn't do a Marks and Spencer's or you know, one of the big people, because they're the ones that have turned around and just said, I'm not paying rent, do what you want. You know, these people, they're a family business and their life is into it, and they can't wait to get back to work, most of them on Saturday, and they will make it work because they will all pull together, and you know, we're all in it together, really.
Well, we certainly are, and picking up on what you said about you try and see an angle in everything that you're doing. Avram, I think if we could go to a screencast and maybe ask Phil, you know, do you think that the Lendlord deal analyzer will help you to actually start to see those angles more clearly, because you can, you know, try different outcomes with different properties and different developments?
Absolutely, I do. I mean, obviously, I don't know this property here, but if we just look at this, so if this was something we were looking at, just everything that you need is there. And what I really like, and what I've been doing of late, when I've been experimenting with this, I have put the details in. I've slightly made a slight variation from this, Aviram. I think for residential, it's brilliant, but I've sort of adapted it a little to use for a commercial deal we're looking at, and that's worked really well. But what I was particularly interested in, and what I find really helpful, is your long-term assumption slider, where we can, obviously, everything on the left-hand side tells us where it's going to be, you know, in a month or 2 months' time, when the deal, when it's bought, when we've done the work. So all down the left-hand side, we know where we're going to be at now. So do we flip it now, or do we move over to the right-hand view? Do we hold it for 5-10 years, or do we, if you bring it right back, Aviram, if we sort of keep it 2 years, we get a little bit of rental income from it, we hopefully get some capital appreciation, and instantly we can tell what all the metrics are that are important to us. The ROI, we know what the bank borrowing is going to be at that point, how much we've paid off, if it's repayment, and I mean, when I was using it yesterday, I was just fixated with moving the slider up and down. What if we sell it straight away? What if we just keep it 2 years? And what if we keep it 10? There's a lot of information there that really does help you sort of come up with your plan of what you're doing. And everyone's circumstances are different. So some people want to take a quick profit. Other people are like we are, that, you know, are now relying on the income as it is our sole sort of occupation. So, but the information's there and it's great. And to be able to, download that, print it, and perhaps take it to a meeting when we're doing other things, and perhaps speaking to a lender, or it just looks really professional.
Thanks.
I'm sure Avaram's absolutely delighted to hear how you've been using it and that you've been enjoying the user interface, because, you know, obviously, Avaram, that's one thing that the team has worked, you know, very, very hard on.
Yeah, it was very important for us, like, that it will be easy to use. So if I start from scratch, basically with 2 inputs, you can get your initial metrics. So I just need to put the purchase price and the expected rent. This is for buy to let. And then we use our default. So we will copy the property value, the same value from the purchase price. We will calculate the stamp duty. We assume that it's an additional property, but you can play with that, of course, if it's your first property. And we take 35% cash investment. in order to get the LTV below 70-75%. And we got the question, perhaps it's the place to clarify it, that the cash investment is not the deposit, because basically you need to put more cash in order to put, you have the stamp duty. If you have some kind of refurbishment cost that you need to put, or furnishing, you need to take it into account. And our calculator take it into account. And Phil, I love to hear your takes, because I think we discussed it a bit also with John Howard. So either for, like, if we look at, even if you look at development projects, then you can use this purchase details box, and you can put a property value that is different than the purchase price. And then if you take the refurb costs into account, so if I will invest this amount, then I think that the property value will be this amount. Then you can have insights on how it will look like, even if you are not getting the rent, just with the appreciation of the property.
Yeah.
And I think that with this kind of workarounds and tweaks, you can now play with it also for development projects. The first intention was, of course, like buy-to-let residential, but I think that with some workarounds, and we will keep enhancing it to support those kind of projects as well.
Great. Yeah, well, what I was doing last night with one that I was looking at was, obviously the purchase price will remain the same, but I was wondering, do we keep this individual property as one and let it as it is, in which case we had a minimal spend, and then sort of moved around with the refurb cost to split it into two, and then increase the value, and just looking at the returns in, and that, so you can analyze, because with a particularly with commercial, we will only really buy a commercial project if we've got at least two sort of exits, really. I mean, not get out of it, exit, two particular potential occupiers or forms of investment. So, you know, there'll be our preferable one, which in our case is nearly always a mixed-use scheme. But we will have at least one or probably two backup plans where, if that totally falls apart, our worst-case scenario would probably be to demolish it as and then let it as a yard, or then create as a building plot or whatever. So just quickly, by altering those figures for what each will cost, you can have a projection for all of your scenarios, really.
Oh, that's really great to hear that you've been using it like that, Phil. Very gratifying to us, isn't it, Abraham? Because, you know, I think some people may assume that deal analyzers are mainly kind of directed at newcomer investors, and indeed this one is so easy to use, as Avram's already demonstrated. You can just fill in two fields and start to receive insights about your prospective purchase. But I think, Phil, you've really made illustrated that it's also for much more advanced people, and you actually can go as deep into it and as you want, and it sounds like you've kind of deep dived into it and really played around with it. And I think Avram would agree that that's really the best way to start really getting a handle on how powerful it is, because you can see all those metrics changing real time as you tweak the data going in. So it's not just for newcomers, it is actually for everybody, and even experienced developers, they'll really make use of how powerful it is, I think.
Yeah, I do. I think particularly for new investors, though, who really just want to focus on initially the left-hand side, it demystifies a lot of what they're told is some sort of weird science that, they need to pay someone to help them with. They can just put a couple of figures in there, 2-3 figures, and they've got such a lot of information instantly, and really check out, and it will just massively help anyone starting out with fine-tuning their strategy, that they perhaps don't even know what their strategy is going to be yet, but while they're considering different options, do they want to buy something just as a straight let? Do they want to buy something that needs work? they can put the information in here for 2 or 3 scenarios, and in 5 minutes they've got an analysis for each.
Absolutely. And Avram, you, since we've done our last call, you've actually added another feature, haven't you? The 10-year feature. So did you just want to give a quick explanation of that?
Yes, so we've added this is the nice thing with the collaboration with Property Tribes and the way we develop this platform. So like we launched this tool a week ago, and we already got a lot of feedback. And we added this long-term ROI. Before we had the ROI just for the first year. But here basically you can, and this is also perhaps also good for development projects, short-term ones. So you can see the entire project's ROI and also the cash return. Before that, you could use the holding period breakdown, and you can see your cash flow over the years. But we just put one number here, like to see the entire return. And the good thing is that, as we did also before, you can do the same for your existing properties. And in any time, you can just add the 10-year ROI to your portfolio table. By the way, for existing user, it's important to click Edit and Done in order to see it calculated. But once you do that, you can compare all of your properties for the long term. So it takes into account if you already hold this property for 5 years, it will take the appreciation, the cash flow you generated in the last 5 years, and it will also take into account the prediction for the next 10 years. If you want to adjust, you just need to click on Deal Analyzer on existing property. The platform will take all the data from the existing property. Because of that, you see the difference usually you see the difference between property price and property value, because this talks about the past, this talks about the next 12 months, and this talks about the long term, and you can decide the term you want, or it's like worth for you to keep all this property. And we also will store your assumptions. And it really depends, I believe, on the postcode, on the type of the property. So you can tweak assumptions per property. So it's not like a generic, it's per property. And once you save it, we will save also your assumptions. And you can also, I think, know by now, like if it's like 29%, so like miss like 1 month in average of rent, or it's like 100%, or if it's 85% occupancy rate. And it's really important to take this value into account when you evaluate a new property, or like even existing property. You can also play with the rent appreciation prediction and with the annual inflation. And then you can save that. And as I showed before, you can see the values on one table for all of your properties, and you can compare them to each other. And you can also add your prospect properties to this table and get the 10 years ROI. You need to go to the deal analyzer. But once you do that, you will see it as well. So like you can see like the combination of your portfolio together with your prospect properties.
Absolutely awesome. I think that is so useful. And some of these calculations, they're quite complex. So it's so incredible to have this software, doing it all for you, because it's all done through coding in the back end, and you're not going to make mistakes. I mean, I am not good at maths, I'll say that now, and it's definitely not my strong point. And I would struggle to do anything but, how even to know the formulas for fairly basic calculations. So again, I think, Phil, having the software and the code do it for you, again, that's mitigating risk, because if you get one thing wrong, everything else is going to go out of kilter, isn't it?
Yeah. And I think because it's so easy and so quick to change, I really like the idea of doing what I expect, a really optimistic and a really pessimistic, and then just make sure that what I expect is actually in the middle. And if it's not, then why isn't it? Are we more optimistic than we perhaps should be? Or it just gives you the opportunity to double check, because, you know, even now, Vanessa, having bought, I don't know, 400 and, well, we're somewhere between 450 and 500 properties that we've sort of bought and either held or sold or whatever. When you get your offer accepted, you still do think, oh God, I hope that's all right. And something like this does think, well, you know, I've got it in black and white that we did the analysis, we were happy to pay that price, it does work for us, and you know, it just gives us a little bit more confidence, really.
Indeed. So as we come to the end now, Phil, if you could say one thing to somebody watching this about, you know, how to get the most out of the software, or a tip that you want to share with the Property Tribes community, what would that be?
I think at the moment it is just be so careful, check and double check, and something like this, as I've just said, I would recommend to everyone that you just need to be realistic and just be very, very careful, particularly if you are starting, because your first deal in particular, just you need to be, you know, it's got to be right. So using Lendord, putting a little bit of data in, and as I've said, like we do, if you do a hopeful, a pessimistic, and then an ultra optimistic, make sure you're somewhere in the middle. It just all adds to your research, because more than ever, research is so vital now.
Mm. No, I agree 100%. And Avram, I think, you know, I really like Phil's suggestion, and I think certainly in these kind of post-COVID market conditions, it would be sensible to err on the side of caution. And of course, with the software, you can put in whatever, you know, as a, for instance, the annual property appreciation, you can put in your own kind of cautious figure, the rental appreciation. It might not even be positive, it might be negative. So you, as Phil says, it's almost like you can stress test the deal kind of live as you're kind of contemplating it and working it out in your own mind.
Absolutely. Yeah, because, you know, everyone at the moment, we're just sort of feeling our way. No one knows where the market's going, but I'm absolutely certain it's going to be quite a testing time. And but on the plus side of that, if you are careful and do your research, there will be bargains. You know, there definitely will, and but you know, you need help like this to find out what is a bargain. Because what initially might look like one may not be that way.
Absolutely. Any closing thoughts, Aviram?
Yes, one note about the scenario stuff thing that Phil mentioned. I think that this might be our next enhancement in the near future, like to save a store, like a positive scenario, negative scenario, like in the middle one, so you can see a different scenario on a prospect property.
Great. Yeah, that would be really helpful, I think, and it just gives people a little bit more confidence then, and something like this where you've got something where you're going to see an agent, and obviously you want to offer invariably less than they're asking. I've always found agents to be receptive to that if you can back it up. You know, if you go and see something that's 200,000 and you go and say, well, through us it's worth 100, but you don't tell them why it's worth 100. If you can justify that, they're going to sort of respect what you're saying. But I would imagine, I've never been an agent, but it must be pretty demoralising to have something on and then get a ridiculously low offer that you've got to go back and report to your client with no justification for it. So And we will always do that. I mean, irrespective of what we're doing, we will always say, you know, to us it's worth X because of A, B, and C. And you know, if you can prove otherwise, but you know, the comparables we've done or the figures for the refurbishment are this much, and we see the end value as this. So unless you can show us something different, that's where we see the value as being. And in general, we've always found that, you know, they respect that, and in a lot of cases they'll take it on board, or they'll provide us with information that, you know, we may have been a little pessimistic. So all of these things that you just need to do so much research now, and I think Lendord does a lot of it for you.
Well, that's a fantastic note to finish on, Phil, because you've essentially said that it could actually become a negotiating tool because it shows all the metrics and you could use that to justify your price. But also, we've been doing live R&D on this call, and Avram's eyes are lighting up at what Phil's saying and thinking about how we can improve it. So really fantastic, as always, Phil, to have your input, and thank you very much for your support of Landlord and being on the call, and really appreciate it.
It's lovely. Nice to speak to you both, and great to speak to you, Avram, and you should be really proud. You've got a great product here, and good luck for the future, both of you.
Thank you very much. Really appreciate that.
Yeah, that's wonderful. So we've been talking to Phil Stewardson, property developer. We are reaching the end of our deal analysing week now, but we have got more to come. We're actually continuing on over the weekend, so do stay with us. More Deal Analysing Week 2020. Tomorrow, Avram and I will be back.